All right, everyone. Testing, testing. 1, 2, 3. How's everybody doing today? I guess good morning for some of you. Good evening for others. All right. Good deal. Good deal. Hey, Steve. Hey, Doug Beal. See some friendly faces here in the room. Here's a quick look. I'm doing great. Yeah, midnight in Australia. Doing great. Here's a quick look at the room. You can see we've got just about every place covered. So yeah, very cool. Very cool indeed. All right, well, we'll go ahead and get started. Morgan Busby, appreciate you guys being here today at Trading Pub. I'm going to go ahead and get the recording going. What we try to do with all of our sessions is record each session so you guys can get a copy of that. All right, well, good deal. Well, we appreciate you guys being here with us today. Again, Morgan Busby with TradingPub.com. Thank you very much for taking the time out of your weekend to join us. We've got a great crowd today, and I expect that we'll have more people logging in as we go ahead and get started. Real quick, before we get started, give you a second to read through a risk disclaimer. You guys have probably seen this before. You'll get to see it again as well. But in case you didn't know, there is risk involved in trading. You know, none of the educators here today are making recommendations. They're just sharing with you education, and you guys can use that however you like. The mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. Pub is the place to receive quality education, all while interacting with traders and investors who are just like you. Throughout the Trading Pub, time here, you know, everything's better amongst friends, so we all want to have a good time. And then also we try to put a focus on charitable giving, and 10% of any revenues given are generated through Trading Pub are given to charities benefiting inner city revitalization. If you want to stay up to date with the Trading Pub, you can find us on the web. It's www.tradingpub.com. For those of you that are in the Twitter sphere, we're twitter.com/tradingpub. And I'll just type these links in as we go. For those of you on Facebook, it's facebook.com/tradingpub. And we are also a contributor on financialjuice.com, which is a news website. So you can go to financialjuice.com to learn more about that. We recently added a breaking news feature on our Facebook page. And real quick, what I'd like to do is just go over some of the rules of the road. You know, if you're going to be here, all we really ask of you is to be cool. You know, these educators and speakers today are taking time out of their day to share with you from the knowledge that they've gained. You know, they're not getting paid to be here. So basically, you know, if you're going to be here, you know, don't be that guy that tries to heckle someone or says rude comments, because we'll basically just ask you to leave. But if you're going to be here, be cool. If you want to hear what they have to say, you know, listen, try to learn as much as you can. If it's not for you, it's not for you, and we hope that you'll log out and enjoy the rest of the day. That's right. You don't want to be that guy there on the left. Today's first speaker is going to be Jeff Gibby of MetaStock. Each of the speakers are going to speak for 45 minutes. We'll put a timer up in the top left so you guys will kind of know, and so the speakers can keep track of their time. But again, we've got a great lineup today. Jeff Gibby of MetaStock kicking us off, followed by Rob Hoffman, followed by Linda Rashke and Damon Pavlatos. Will be followed by Nathan Tucci of Winner's Edge Trading, and then Eric Hale of Options, and then Frank Stanley of DTI. So Jeff, at this time, I will turn things over to you. You're always appreciated here at the Trading Pub. We enjoy having you. MetaStock's been a great partner of ours. And so at this time, I will turn things over. All right, 1 second. I think Jeff's getting his audio set up.
Testing, testing, testing. Can you hear me?
Okay, just give us 1 second here.
Test. Testing, testing, testing. All right, I'm testing the audio. Can you guys hear me? Testing. I'm listening to the sound. Testing. Testing. I'm testing the audio. Can you hear me? Testing. Testing. Hello? Testing.
Hey, Jeff, we can hear you. Go ahead. The room is yours.
Okay, good. Hopefully that'll continue. Good morning, everybody. Can you hear me now? Let's go ahead and get started. My name's Jeff Gibby. Appreciate everybody coming today. Sorry about the little bit of the audio glitch there. I'm not sure what happened, but I'll try not to do it again. Good morning. Let's go ahead and I hope you guys are excited because you get another legal disclaimer. So I have to read this out loud. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So also, yeah, like Morgan said before, I'm not really authorized by, I'm not a financial planner, I'm not a financial advisor. We will be talking about specific trading methods that I actually use in my trading today, things that are available in the MetaStock program, but it's not a recommendation to buy or to sell. So let's go ahead and let me go here with MetaStock. I've been a little bit sick this week, so I'm not normally this echoey and weird in terms of being a little bit of a clamp, but I'm feeling good. So, and I'm happy to be here. I'm glad everybody made it out here to see me. I've loved working for MetaStock. It's been an awesome 16 years. It's a good group of people that we work with. We have a product that people use and gives them better results in their trading. So today's class really isn't going to talk a lot about MetaStock, except for very specific feature and functionality. One method in MetaStock that I happen to like a lot. And the reason I like to do that one is it's very specific. We can go in and we can talk about scanning or testing, and there's a lot of things that you can do with MetaStock. But really what my goal here today is to give you some ideas in terms of ways you can use MetaStock effectively, because we're going to give you a free trial at the end of this. So MetaStock's a company that was founded in 1982. Back in 1995, we were bought by Reuters. The Reuters relationship has been awesome for us. We've been able to kind of put data from India and Australia and just about 176 different exchanges. I know there's a lot of people that are international here today. So we have your data. If you're interested in kind of the products, you'll be able to do whatever you're interested in, whether that's Forex or futures or Australian stocks or Indian stocks. And we also offer a lot of the really, really cool news services, but we've taken the price down to a price that's very, very affordable. We're pretty happy with what we've done, and I'm not going to spend a lot of time talking about us, but in the last, since 1982, we've sold about 310,000 copies of the software. We've been rated #1 in our price category for this year. It's 21 years in a row. But I think one of the things that we're most proud of is, according to our recent survey, about 86% of our customers say they're more successful in the market. So we're pretty happy about that. We're working on the other 14%. So what am I going to be talking today? I'm going to talk about basically the RMO. Okay, and the reason I put this slide in here is that there's a lot of stuff that we're not really going to talk about. MetaStock has one of the best system testing mechanics in there. It's got a great scanning mechanism to help you find stocks. It's got a great expert advisor tool, and really there's a lot of really cool stuff in the product that we're not really going to discuss. I could literally talk about MetaStock for a week and a half to train you on it, and obviously when we're talking in about 45 minutes. So today we're going to really talk about the RMO method. Okay, I already talked about that. To start, I'm sure all of you have heard like the trend is your friend, or befriend the trend, or a rising tide lifts all boat. Anybody hear that in the marketplace from an educator or something like that? So the RMO is really what they're doing. We want to trade in the direction of the trend. So the RMO is really going to be there to help you figure that out. And it's a trend following system. It's not a kind of like an overbought, oversold system. It's very much a trend following system. So I'm going to show you exactly how that works. First, I want to explain to you, a lot of times I'll say RMO and people be like, what is RMO? Well, RMO stands for Rahul Mohindar, and he's one of our dealer partners in India. In fact, he's one of our best dealers in the world. He's been #1 for quite a few years. And he's actually a CNBC panelist. And one year, he was in Utah, and this is back when I lived in Utah as well, and he basically showed us the method that he teaches his students. He runs a lot of training in India to use in the market. And we liked it so much that we actually purchased this method from him. And I'm glad we did. Actually, this is the method that I like to use when I go in and do trading. Not only that, it's the method I like to show because it's very easy. It's totally objective, and it's something that you can use in your own trading. So it's been a very good addition to have into MetaStock. So this is the reasons I like it. Number one, it's 100% objective. So we're not making guesses on like what QE4 is going to do, or the fiscal cliff, or the financial meltdown, or QE3 or QE2. We're basically making rules based on what you can kind of measure in the market and what the security that you're interested in, or the future, or the Forex you're interested in is going to do. If you use it properly, you'll use solid money management, which I think is critical in the market. It works on a lot of different time frames and a lot of different instruments. I've shown this to people in Saudi Arabia, Australia, India, London, on local markets. And it doesn't work all the time. It's important to use the instruments that it works well with. But it works on a lot of different instruments. And it's very easy. I'm going to take you through the 3 steps that you need to use to apply RMO in your trading. And if I do my job today, you'll understand exactly what the RMO is. Okay? So if you do have questions, go ahead and ask them. I'll do my best to answer them as we go. And let's just start with what the rules are. Let's go ahead and get kind of to the juice of it, or to the meat of it. Excuse me, 1 second. Let me drink a little bit of water. So if we want to identify, well, if we want to trade with the trend, and if we want to befriend the trend, and if the trend is our friend, it would be helpful if we understand what the trend is. So what we're going to do, the first step we're going to use is we're going to identify what the major, or the primary, or the long-term, usually trying to say the long-term trend to kind of keep the vernacular the same, but if I say primary, that's what I'm meaning. I'm talking about the longer-term trend on a stock. So let me swap over into MetaStock here. I've already opened a stock that you guys might be familiar with. This is Apple. And I've applied the RMO trade model to it. Now, for those of you that have MetaStock already, I'll just show you kind of real quickly how you do that. If you've got a chart open and you want to apply the RMO trade model to it, all you're going to have to do is you just right-click on the chart, you go to Apply Template, and the actual template that you'll apply is called the RMO trade model. And it is right here. So you just click Apply. That's going to put these indicators on the chart for you. It's going to put on the indicators that we're going to be using. Okay? Yeah, you think that Apple's been in a downtrend? I'd agree with that lately. So let's go ahead and just talk about how we would identify that and how we would measure that. Okay, so what I've done, this is the indicator that we call the Rahul Mohindar oscillator. So this is our primary trend measurement tool. This indicator is super easy to read. What I'm going to do is I'm going to grab my horizontal line tool here in MetaStock. I'm going to put a line right about 0. Okay. Now, the way we read this tool is if it's up above 0, well then Apple's going to be kind of trending up. And if it's trending up, if it's up above 0, we're going to call it strong in this location. Okay. So again, this is the primary trend or the long-term trend. Okay. And if it's strong, it'll be above 0. Okay. I meant to say equal strong. Okay. And now if we want to buy into strength and sell into weakness, well, our rules are fairly simple here. If it's above 0, then we're allowed to buy Apple. If it's below, but what we're not allowed to do is we're not allowed to short. Okay. That's it. That's step number 1. Now notice kind of the vernacular that I used. You're allowed to buy, but you're not allowed to short. This isn't a trigger yet. We'll get to the trigger on step 3. Right now what we're doing is we're just measuring the strength. We're looking at the forecast. We're looking at where the highs or lows are coming in on that forecast. And we're determining exactly what it's doing right now. So if we're looking at Apple right now, it's obviously below 0, and it's obviously been in a fairly extended downtrend for quite a few months. As long as this reading stays below 0, then we would just reverse the rules from here. So I'm just going to copy this. I'll paste it down here. Very simple. If it's below 0, then it's weak. Okay, if it's weak, we're allowed to short, but we're not allowed to buy. Okay. Oh, it's that simple. Okay, so step 1, we look at the stock, we analyze what the long term is doing. If it's above 0, we're allowed to buy. If it's below 0, we're allowed to short. That's it. Simply the first step. Okay. The other thing that we've done to even kind of make this a little bit easier for you to read is if I go ahead and kind of minimize that, you'll notice at the bottom of the chart we've got the RMO is bullish or the RMO is bearish. Okay, so you can either look at the indicator up at the top of the screen and it'll tell you, or you can look at the very bottom and it'll actually tell you as well. Okay, so that's step number 1. If we're looking at Apple today, or yesterday I should say, we can't really buy it today or short it today, but if we're looking at Apple, we know that our permission would be to go to short. Okay, is that clear for everybody? That's step number 1. Okay. Gerard, I'm sorry you couldn't see the chart. I'm assuming everybody else could see the chart. Okay. Okay. Well, hopefully we can get some assistance. You ask a pretty good question. How is long-term defined? To be honest with you, I don't know. I think he's looking at about 4.5 months of price history to do that calculation. Okay. So again, just to kind of recap step number 1, if it's bullish, you're allowed to buy, but you're not allowed to short. And again, it's not a trigger. We're going to get to the trigger. Okay, we have 2 more steps for it. What we do is we want to focus in on the short-term trend. Okay, we want to identify what that's doing. And what I'm going to do is I'm going to go back into MetaStock real quick, and we're just going to kind of do the short-term trend. Okay, so to do that, Rahul had an incredibly imaginative name for this indicator. I'm just going to change the view just a little bit. Okay, and put a line right here at 0 again. Trend is called swing trade number 2. Okay, and we read it exactly the same way as we read the primary trend. Okay, in other words, I'm just going to copy this out to make it a little bit quicker for me. In other words, if it's above 0, then it's strong. I'll just change this to short-term trend. If it's above 0, it's strong. And if it's strong long-term and short-term, we're still allowed to buy. Must match primary trend. but we're not allowed to short. Pretty much how we read this indicator. Okay. Again, we'd reverse the rules for to go short. So if it's below 0, then it's weak. It's got to match. And then we'd be allowed to short, but we wouldn't be allowed to buy. Okay. So right now, again, if we're looking at Apple, our primary trend, the green indicator we just looked at, was weak. Our short-term trend, the pink indicator right now that we're looking at, is also weak. So we'd know on Apple on a short position, which is what I'll cover in step number 3. Now, if they don't match, if we were looking at Apple just a few days ago, you'll notice that we're in a bit of an area of strength here, but we were still weak long term. If they don't match, we don't do anything. We just wait. Okay, and so that's how we would read that particular indicator. Okay, does that make sense for everybody? Everybody see my screen now? All right, good. Let's go ahead and get back to where we were. Sorry about that, guys. Sometimes you just can't handle the technology, or sometimes the technology manages you. Okay, just to kind of recap where we were. Again, we're looking at ways that we can kind of trade with the primary trend and the short-term trend. Okay, so just to recap, we were looking at Apple. We're currently bearish long-term, and we're bearish short-term. Okay, and the way we were reading that bearish trend is we just look at the pink histogram here. And if I can pull it to full screen again, this week we're allowed to short, but we're not allowed to buy. Okay, that's simple. But it must match that primary trend. So that's kind of exactly where we left off at. I'm going to kind of switch back into my PowerPoint. If they don't match, in other words, if we're strong long-term and we're weak short-term, we're not allowed to trade. We can wait. MetaStock does have a scanning tool in it that we call the Explorer that does allow you to look and find maybe other securities that are currently either strong long-term or strong short-term. So you could use that. But unless we actually have some weakness that's confirmed and on the chart, we don't want to actually trade using RMO unless we have the confirmed strength and weakness. It's kind of like getting into the car. It's going to be a little bit better for you if the lights are kind of all green and you're going to get to where you're going a little bit quicker. And it's the same in terms of what you'd be doing with your trading. So anyway, now we've looked at Apple. Right now Apple is bearish long-term and it's bearish short-term. So what we want to be able to do is we want to be able to identify those points, which we would call trigger points, that are going to get us in and out of the marketplace on a very consistent basis. So let's go back into MetaStock. I'm going to cross my fingers. I think going back and forth between PowerPoint and MetaStock might have caused our technical issue. So I'm going to ask you guys if you can see my chart again. All right, good. I'm going to stay just in PowerPoint for in the chart for the majority of the rest of the demo, just so that we're not switching back and forth unnecessarily. So let's go ahead and stay here for a minute. The other thing that I was going to mention, but I didn't because we had a bit of the technical issues, when this indicator drops down below 0, a blue color when it's up above 0 to a red color. So if you want to identify that primary strength or weakness, the primary strength, you can look at the RMO meter here at the bottom, and it's going to tell you it's bearish. You look at the secondary indicator or the color of the chart to see if you're short-term bearish. And as long as those match, then you're still allowed to take a short position. That pretty much makes sense for everybody. If you have questions, feel free to ask. It is a very simple system to use as long as I'm doing a pretty good job of explaining. That's one of the things I like about it, too. So now, how do we get a trigger? And I'll kind of talk a little bit about that. Remember the green indicator that we were kind of talking about? I'm just changing this into a line real quick. Was the long-term trend or the primary trend. This red indicator that seems to act a lot faster to price activity, that's measuring our short-term trend. The blue indicator is kind of like our medium-term trend. So this indicator that kind of is in the middle of the two, that's basically measuring exactly kind of what the stock is doing on a medium-term basis. Now, for the purpose of RMO, you don't really care if it's above or below 0. It's not something that you're looking for with it. What we're using this is we're using this as a trigger mechanism. So the way that Rahul explains it when he teaches his students how to trade it in India is basically it's a change of direction or a change of force or a change of momentum. Let me try and explain what I mean right here. I'm just going to kind of zero in on this part of the chart real quick. And if this measures the short-term trend, and this one's measuring the medium-term trend, the fact that this is kind of dropping down pretty dramatically and going below the medium-term trend shows a potential shift in the marketplace. He calls it a change of direction. Okay, and this is actually the signal that he'll use to get into the market as long as it matches his primary and his short-term trend. So this area where I've identified on the chart, basically that's a bearish shift of momentum. The short term is getting a lot more bearish than the long term. And when that happens, what we do with the system is when that cross happens, we'll put an arrow right there on the chart for you. Okay? But if we were looking at this chart of Apple, obviously Apple had a huge run up to this point. If we're looking at Apple, we're not actually going to take this trade because we're not allowed to. We're in a bullish zone long term. We're in a bullish zone short term. And as long as that stays the same, we're not actually going to institute a trade. We'll kind of keep an eye open for this stock to actually get bearish. If it does, then we'll take the trade. So the way we do this is we totally ignore this system until it gets this signal until it gets bearish. Okay. Now you'll notice 4 or 5 days later, it kind of drops down below 0 right here. We start to get the red highlights on the chart. We're still not allowed to buy because we're still bullish. So Apple had a huge, huge run up until this point. And it's going to take a long time for it to kind of get a bearish reading for us. Okay. In fact, it takes probably, let's see, this is 925. We finally get a bearish reading on this stock long term on 10/19, which is almost a whole month later to sell. And this is the time that we've actually got a confirmation that the trend is going to be weakening. This is the time that we'd want to buy. Okay, and that's exactly kind of what we'd be looking at. Now, I do want to point out a few things. This is where we're going to buy, or actually, I'm sorry, this is where we're going to short Apple. Okay, and I'll tell you straight out, it's nowhere near the top here. Okay, this is a trend following system. In fact, it's about 100 points off at the top. Okay. But let me show you a couple of things before I kind of get into how we actually trade. The huge monumental run up that we've had was bullish the whole time. We were only taking long-term trades up all this whole time. And this whole year it's been bearish, and you've all been watching Apple. You've seen kind of how it's dropped. So, well, because we're using a trend following system, we're never going to get into the exact top or the exact bottom. We're going to do a pretty good job of keeping. So how do we position the trade? How do we size into the trade? What exactly are the rules that Rahul teaches? That's kind of what we're going to kind of talk about right now. So right here is where we decide that we want to take a short position. Linda asked, does it work on intraday? It absolutely does. Let's go ahead and kind of zoom back in here. Okay, and I'll tell you that with kind of the same disclaimer I give everything. It works on a lot of different instruments and a lot of different time frames. What I would recommend is to kind of play with it. We're going to offer you a free trial to anybody that wants to try out the software. Try it, see if it's a system that works well for you. It's worked really, really well for me. But there's about 32 different systems in MetaStock as well. So this may not be the perfect one for you, but it's important to kind of be able to look at it and make sure that it works for what you're looking to do. Okay. So as I saying before, this is where we're going to go. I'm just looking at my time. I've got 10 minutes. I better hurry. This is where we're going to go short. There's a couple of other rules that are very important with how we're going to trade this. What I'm going to do very quickly is I'm going to take my horizontal line tool. Okay, I'm going to put a line before. I'm going to put my horizontal line right above that. Now, because I'm running out of time, I'm going to go a little bit quicker. The way that I'm going to trade this is if it drops down below this line, that's a confirmed short. That's where we're going to take our short position. Okay, so give it a little bit more room. We want to confirm that trend just a little bit more. A lot of times it might just bounce off of that. That might be a support level. We want to make sure that the trend's confirmed by pushing through that low. Okay, the second that we take that short position at 608.50. Okay, I'll just write that on the chart real quick. We're going to cover our position by putting in a stop loss. And I'm going to put the stop loss over the highs. Okay, in this case, my stop loss would be about 643. Okay, now what do I know now? And since again I'm running out of time, if I know that I'm going to get in at as close to 608 as I can, and I'm going to get out at 643, well then I have a pretty good idea of what my risk is going to be. Okay, it's going to be the difference between 608 and 643. Usually I'll figure that out as a percentage. It's not a very big percentage. If maybe somebody can calculate it for me and post it in there. But I know a pretty good idea of what my risk is going to be on this trade. Now you'll notice 1, 2, 3, 4 more bars later, we finally short. And we would get in as close to that price as we can using this method. Okay. Now let's just kind of go through quickly here because I want to show you how to manage that trade. I'm going to mute myself for just a second because I'm coughing. All right. A little bit of a virus this week. So let's go ahead. So we continue to hold this down. It's been a nice dramatic run down. Here we get a long signal. Okay. But we're still bearish long term and we're still bearish short term. We're just going to continue to be bearish. Okay. Now if everything goes against us, in other words, if we go bullish again, then we're going to go ahead and get out of this position. And we did have a pretty good bounce up. We did go even bullish short term, but we didn't go bullish long term, so we're going to stay in this trade. Okay? It does eventually kind of settle down. The weakness comes back in. We get another sell signal. How do we handle that? Again, I'm going a little quicker than I normally do. The way that we handle that is we don't short more. Rahul's very specific when he teaches the system and he teaches the method. He basically wants you to move your stop and protect some of that profit that you've made. So I'm just the bar before and I put my line right above it. Okay? And that's the process for kind of moving your trade. Okay? Let's go ahead and look at it from a little bit more of a longer term view. Okay, I'd move my stop again right here. I got 7 minutes. Okay, I'd move my stop again right here. Okay, actually my stop would be right about here because that's the higher value. Okay, move my stop again right here. Okay, and then I probably would have stopped out of a trade or I'd still be short. Yeah, definitely stopped out of that trade. Okay, and then we just kind of repeat that. Now what I want to point out to you, run up, if we went trade by trade by trade through it, this would have been an awesome RMO stock just because it's a very, very, very trend following stock. I've been using Apple through the bull trend. I've been using it through the bear trend. It works really, really well and has for a number of years just because of the extent of the trend. I want to show you a few examples off of the actual things I like to trade, which is the diamonds. So we're going to go ahead and regional breakdown of the market. One of probably the biggest ones I've seen. I've only been in the market for about 16 years though. Boom. if you're using RMO well before the president of the free world got on the country or on the television and actually told you that the sky was falling and all that kind of stuff, you would have been short. The recovery year that followed 2009, you're bullish almost the whole time. This is the Dow Jones Industrial Average, by the way. The recovery in 2010, bullish the whole time. Okay. The big collapse you were bearish for, we didn't catch all of that run, but we catched a good part. 2012, that was awesome. Now I'll be really specific for you. Right before this particular takeoff, there was a lot of sideways action in the marketplace, and I think I probably took around 6 losers in a row right before this. But this particular trade, because of the discipline and the money management and all that kind of simple stuff, made up for all of those losses and then some. Okay? The reason I like this, the reason I like to show it, and again, we're not making guesses on QE3 or QE4 or what Fiscal Cliff is doing. It's totally objective. It's a very easy system to use. I like it because it uses solid money management. I can show it on a lot of different instruments, and it works really, really well. It's not the only system in MetaStock, but it's a really, really good one. And the reason I like to show you it is that a lot of you're going to take me up on a trial offer. I'm going to let you try. And I want to give you something that during that trial you can play with and like and use and will be effective for you in terms of the trading that you are doing. So that's the reason I like to show that. Again, MetaStock's a very, very big tool, something that works really, really well in the marketplace. So how much does MetaStock cost? How much does the best rated software in the industry cost? Well, it's $59 a month for end of day. Okay. Again, we do have data for Asia. We've got England data. We've got Australian data. $59 a month for an end of day version. I'm going to give you a free trial on it. Our real-time version, which actually comes with a product called MetaStock Zenith, is only $250 a month. And again, you can also get that for free for a month to evaluate. In addition, I'm going to give you a free month of online training. They do webinars, classes 3 times a week, not twice a month, 3 times a week. And you get a free month of that with your free trial. To take advantage of that, go ahead and visit www.metastock.com/tradingpub. Did I run out of time? No. Okay. Leon, if you have MetaStock before, you should come in and take a look at an upgrade. Call one of our agents, tell them you came to the Trading Pub webinar. We have a really, really good upgrade pricing for owners that used MetaStock before. Well, Doug, thanks. I felt a little rushed at the end. So I appreciate your guys' time. It's great to have everybody here. And I'll see you again at the next one. Oh, that's fine, Morgan. All right. Thanks for having me.
All right, good deal. Well, Jeff, we appreciate you. I know you've had the flu going through your neck of the woods, so hopefully you and your family are feeling better. Great job on that. We apologize for the technical issues, guys. That was something on our end, not on Jeff's. And so again, that's right. Finished a couple minutes early, so did a great job. We do have if you want to take Jeff up on that, I'll type the link in. But again, basically, you can get a free 30-day trial of the software, test it out. It's really, the software is really for individual traders who make their own decisions. So hopefully, you guys can check that out and enjoy it. So, all right, guys, at this time, I'm going to turn things over to our next speaker, Rob Hoffman of BecomeABetterTrader.com. Again, we are recording all of these events. We'll get copies of the recordings posted on our website. So at this time, I'm going to screen set up. Here's a look at the schedule for today. We just heard from Jeff Gibby of MetaStock. Jeff's followed by Rob Hoffman of Become a Better Trader. He'll be followed by Linda Bradford-Rashke and Damon Pavlatos. That'll be followed by Nathan Tucci, Eric Hale, and Daryl Martin and Frank Stanley. So it looks like Rob is getting ready to do that. While we're waiting for him, again, here's the link again if you want to take a 30-day trial of MetaStock for Trading Pub users.